Hi, and welcome to Hedge Fund Manager. I'm Carl Michael Seiding. Today we're doing a deep dive in company research, and the company of today will be LVMH, which happened to release its quarterly earnings report late yesterday. And the stock is opening up pretty bad, pretty negative today with minus almost 10%, which actually I think is a good buying opportunity. But we will see that in this deep dive. So in a deep dive, there will be a lot of details and nuance. This is what a professional sell-side analyst would do, not often maybe a portfolio manager, because they rely on other analysts' work. But anyway, I'm going to show you more or less all the parts of a true deep dive in a company research. This is not something that I think most people should do, but they actually should know that this is the best practice for researching a company. So among the parts of a deep dive, we will look at screening and searching and finding a good stock among a group of companies. We will look at technical analysis on the company, on the market. We will reference P equals F times V run through for the valuation of the company. And then I will also show you more nuance in how to make these forecasts and actually go straight to the real numbers, not just using a chart-based approach. And not least, perhaps one of the most important things when comparing various investment prospects is estimating both an annual total return and a likely share price trajectory over the coming years, as well as estimating the risk level for the investment, so you can make comparative rankings between various investment alternatives. And finally, also some macro considerations. Remember that I always say that the most important thing with company investments is the micro details, what the actual company is about in terms of value drivers and likely valuation multiples, and how that in total render an annual total return, a likely one. And technical analysis and macro considerations are just slight headwinds or tailwinds which could aid in your timing of the investment, or perhaps also in whether it is easier or harder for the company to reach their guided targets and your estimated extrapolations of their recent histories. So we'll start with screening. And there are many ways of doing screening in order to find interesting companies. So one really good way, I think, for an amateur investor is to see what other large and successful investors and institutions are doing. And to do that, there is a certain report that they have to fill out quarterly, which is called the 13F report. And we can access these through, for example, HedgeFollow, which is it's an online free resource where you can see what other investors are doing. And here I've simply clicked on the largest hedge fund buys recently. And what we see here is that the largest hedge funds have been buying Apple the most, then Nvidia, Microsoft, Amazon, the Standard & Poor ETF, Broadcom, and Meta. And we can also see which of these large investors have been buying these. So perhaps these companies and these investors know what they are doing. Perhaps that gives us a good place to start for what to invest in. On the other hand, remember that since these stocks are the largest ones in the universe, they are also bound to be the largest buys and not typically or necessarily the best value or best risk-adjusted value. So this might not be the very best. And perhaps more interesting is a little bit further down, still huge buys, but smaller and smaller companies. So this is one good way of screening for investment ideas. And at least we get a lot of names to analyze further. And what we can do then is we collect a number of these companies and we go to another screener, for example, Finviz. And in Finviz, we can access various portfolios. So, for example, or we can create our own portfolios. So I have made one here quickly for 2025. Entered a few of the interesting ones like Meta, Google, Spotify, etc. That I think might be interesting to buy now that they have fallen a lot recently. We can then take this portfolio that I have created here and open it in the Finviz screener. And here we have a tremendous amount of variables to sort on. For example, if we click here, we have valuation, financial ownership, for example. If we look at valuation screeners, we can sort them on forward PE ratios from cheapest to most expensive or from most expensive to cheapest. We can do that as well for price earnings growth ratios, price sales ratios, price books ratios, etc. We can also find things like in ownership, we can find short float, that is how much short selling is there in the stock. And if there's a lot of short selling, that could mean that huge short biased funds have targeted this company, but it also means that there is a latent buying pressure because they will have to sooner or later cover their shorts. So these are interesting things. We can also, for example, sort on market capitalization if we are interested in large stocks or small stocks. And we also have access to ranking these in combinatorial ways. So for example, let's go with just the biggest companies and let's go with low short float, and let's go with let's see here, let's go with low price earnings ratio. No, let's go with low price earnings ratios. Suddenly we can't find any companies here. So let's see if there are any interesting among the large companies or among the mid-sized companies. It's difficult to find somebody with a low short float or a price earnings ratio below 15. So let's take under 30. We're not actually getting any results here. I'm not quite sure why, but so these are ways of screening, and what you can also do is go for whatever your friends are doing or other people in your network, news, tips, analysts, but also, for example, through a watch list. So here I have my watch list, wonderful companies to buy, and I have collected a huge number of companies here, and I can sort them on, for example, fundamentals like price earnings ratio, and come up with really cheap companies like Volvo and Traton, but also, for example, Louis Vuitton here, which is now trading at just 20 times earnings, which is very low compared to LVMH's history.